bank account or their personal bank account. We are not good at record keeping. Some providers actually don't have an accounting system that they use. They're still using Excel, pen and paper in the 21st century. Again, it's not a good fit. Proper configuration of your accounting software. I'm sure you know, or some of you might know about making text digital from next year. Yes, maybe, no? No? So effectively from next year, the government has decided to move some text online. Some text is online. They don't want to see physical paper copies of your self-assessment. They want it to be done online. So they've introduced this thing that they call making text digital, and it's being rolled out in phases. First, it's your self-assessment, corporation tax, VAT. Effectively, all taxes now need to be done online. They don't want them to be done the traditional way by pen and paper. They'll also ask to see training for you, your employees, or people who are handling your payroll data, or VAT records if you're VAT excuse me, registered. And again, if you keep up with the compliance and the ever-changing legislation and rules, especially around PAYE, you can avoid issues when they come for an inspection. I would also recommend reviewing your internal systems. I'm sorry to say, but a lot of directors put too much trust in their accountants. You sign what your accountant gives you without understanding what he's making you sign and submitting to company's house. Yeah? By the time that inspection comes, 4 years later, you've moved on 1, 2, 3 accountants, and your current accountant can't support you because they have no idea what was done 4 years ago. It comes to you, the director, and not to your accountant or your previous accountant. Before you sign your accounts and they're submitted, ask your accountant questions. Understand what they've put in your accounts. Have that review meeting with them. Don't just be too quick to make sure that you're making it for the deadline and not understanding what you're signing. Because at the end of the day, you, the director, are responsible for what you submit. If you have noticed that you're doing something incorrectly, especially around payroll, it might be better for you to self-disclose. Let them know early. It's better than you trying to hide it from them. You also see that when they give you a letter to say we're coming for an inspection, one of the paragraphs will actually say, if you know you're doing something incorrectly or illegally, let us know. Early. They'll state that. And they'll even state, we'll reduce the penalty that you'll be given if you let us know. But if you waste their time, try to hide, and then they uncover it, you can imagine the impact of the penalty that will be coming your way. When they come for an inspection, they're nice, they're smiling at you. They'll send you recommendations or their findings after. Implement what they have suggested. There is nothing that is more frustrating to them than giving you recommendations and actions to take. They come up for a follow-up interview and those things are not yet done. There is no excuse for that because they give you ample time to correct your wrongs. Now, why am I focusing on taxes? I know at the start I said we've been seeing an unprecedented amount of increase in HMRC investigations. I think during COVID they were understaffed, under-resourced. We've come out of COVID, they've invested so much money back in HMRC, and now they're catching up on the backlog. The amount of companies that are being taken to high court because they owe HMRC money, it's unprecedented. It's expensive for you guys, the directors. It's expensive for your companies, and it puts your companies at risk. Some companies will have to file for liquidation because you owe so much money that they're going to take it all anyway, and it means your company will not survive that. So make sure you're doing things the right way. I mean, give to Caesar what belongs to Caesar. It's as simple as that. Pay tax when tax is due. Your company is giving you the golden eggs. Don't kill the goose for the golden egg. Pay tax. The money that's coming, make sure you give to Caesar what belongs to Caesar. And what I always tell directors is, unfortunately, your company is not your company. Stop treating company money like it's your personal money. There are going to be tax implications when you move the money from your company to your personal account. I know it's painful to hear because you're thinking, I've set up this company. This is my company. This is my money. But there are tax implications. It's as simple as that. Again, speak to your accountant, understand what's the best way of you extracting profits from your business, either via salary, dividends, or what works for you. Again, there are consequences for everything that you do. I did say I'm bringing a difficult topic, but I didn't expect it to be like a funeral in here, so I do apologize. I do apologize. But I think it's just to rub the stigma away that accountants are boring, so hopefully I've shaken you up a bit and you are not bored but frightened. What can you do to protect yourself or to make sure that your company is running as smooth or as efficient as possible? For some of you, this is what changes for the generations to come. You know, the company that you have is the opportunity that you've given that changes. I'd like to introduce you to my, I call it SPs. Apologies for that pun. It's not meant to be vulgar, but it's essentially SPs, essentially. You need to make sure that you have systems in place that are robust, that support what you're doing. A good accounting system, a good payroll system, a good HR system. Make sure you have systems that are fit for purpose. Make sure everyone within your organization understands your processes, simply how you do things around here. What is the process? If they're speaking and they're interviewing an employee, can they speak about your processes confidently? Do you even know the processes of your business confidently? Policies. This is essentially just a high-level guideline of how your rules are defined within the organization. Do you have policies? Policies around holiday pay, policies around sick pay, policies about absenteeisms. Do you have policies that support what you want to do? Procedures. How is it actually done? Do you have a procedure that you follow? I always like McDonald's Happy Meal. I have 2 young boys. Wherever we are, a McDonald's Happy Meal is made the same. The procedure is the same. You know what they're doing and you know what you're getting in that. The only variation is either you're choosing a toy or a book. Yeah? When it comes to your business, does it depend on who's actually doing the task? If it's the registered manager who's doing it, you know it's done up to a good scratch. If it's the deputy who's doing it, you know, I'm not too sure how they're doing it. Do you have procedures outlined that are easy and simple to follow? The nightmare is almost over, guys. I kid you not. I'm only left with one more slide. Now, how can Blue Hector help you? I know tax is, like I said, it's a topic that a lot of people shy away from, but it impacts your business. If you want to find out how we can help you streamline your finances, your processes, please come see us. They say tax is your responsibility, right? It's up to you to declare your taxes rather than them to find. But a lot of people don't do that. So it's harder for them to investigate things that are not digital. Copies of invoices that you might have in a briefcase somewhere, under your bed, in a wardrobe, to extract all those records. If things are electronic, they can have systems that do all the, the first level of inquiries, just making sure that you're compliant without having to have human input, if that makes sense. So number one, with digital, making tax digital, you see that they will be a bit quicker to analyze the taxes that you submit. Number two, I'm sure you might have heard that if you have an online shop like Shopify, they now get eBay, they now get to understand what income you're getting from those sources of income. For people who used to sell things on the side, HMRC actually now starts to have those information as well. Again, it's through making tax digital. They see it as the future. They don't want you to be posting and sending stuff to them anymore. So I definitely think this will make it easier for them. And hopefully for us as directors and accountants, digital is the way to go. Just look at how the world around us is changing. If you jump on the bandwagon early, you're compliant, you learn what needs to be done, I think you'll be at a better stage than someone who will be forced to move. Hopefully that answers you. Yeah. So, good question. We have partnered up with a few suppliers within the market. So, for instance, when you come to us, our preferred accounting system is Xero. We're a Xero partner. We use Xero. We prefer Xero for reasons that I will not say on camera to the others. But there's many out there. There's QuickBooks, Zoho Books, Sage, One. It's a lot out there. When it comes to payroll, there's a lot of systems as well that you can use. We use one that's called BrightPay. That's our preferred partner as well when it comes to making sure that we offer you a seamless payroll solution. We don't have a Blue Hectare app because of all the compliances and support that's needed, but we've partnered up with key suppliers within the market that can help us deliver a similar service to you. To the clients that we work with, number one, we go paperless from day one. Once we start working with you, we'll give you access to Zero, where you get to access all your financial data in real time. And effectively, for those who don't know, I'll just delve into it a bit. Zero, we connect your bank account. We can see your transactions coming in and out from your bank account live, i.e. as you spend money, we know where that money is being spent. We see you've spent £5 at Holiday Inn in Newcastle. We'll ask you for a copy of a receipt for that. You have to upload your receipt on a system called Dext, which is an invoice capturing system. Once you upload your invoice in Dext, we will take that Making Tax digital box because that's compliant with the changes that are coming. It's an electronic copy that you've uploaded that supports the business spend that you have done, systems. So you have Zero, you have Dext. Then when it comes to payroll, we already touched on BrightPay, which is another system that we use. And again, all these systems are cloud-based. Why is that important? If you're here in Dubai, South Africa, you can still get access to them and see how your company is performing and run your company. So new businesses who are operating and they don't have money and then they use their own business, personal accounts to fund the business effectively. What we call that is the director is giving a loan to the company. Okay? The director has injected money to the company to pay for company expenses because the company is not yet generating any income. You need to make sure that is recorded well correctly by your accountant because, as I said, the director has given a loan to the business. Why is that important? When the business starts being profitable, you should be able to take that money out tax-free. The problem comes when that money into the business was not recorded correctly. Now you are telling me, I want to take my 40,000 out of the business because I injected 40,000 3 years ago. I will say, no, you can't do that. And you pay tax on that 40,000 because I did not see that money coming into the business. Because for hours that you spend in a business, you need to give yourself a salary. Now, if you have no income coming in and you're paying yourself a salary, then you're paying PAYE tax. Where is that money coming from? It's coming from your own pocket. So you're putting money into the business to pay yourself a salary and then pay taxes as well. Do you see how that's a chicken and egg? You're almost shooting yourself. If you can, that's fine. But do you need to put the money that you from personal into the company to just pay yourself again and then pay tax? Do you?
How about when you want to claim it like retrospect later on?
You claim salary that you declared but you didn't pay yourself. They come and say, okay, you issued yourself a payslip of £2,000. Where are the funds coming from your company to your accounts? Again, because people use this as tax avoidance schemes, what stops you from saying you have 100 people that you've been paying and not transferring money to them? Yeah, exactly. So when it comes to salary, what's on your payslip, what you've said you're paying, we need to see that being paid. You can't declare a salary that you're not paying because you want to claim it in a future date. That does not work, unfortunately. I spoke about ways in which you can get money out of the business as a director. Number one is salary. Number two is dividends. The catch on dividends is you can only take a dividend if you have made profit. You can't take a dividend from a business if you're making a loss. I'll repeat that. You can't take a dividend from a business if you're making a loss. If you do that, the tax you pay is 33.75%. To put into context, if you take 100,000 from the business as a dividend when you're making a loss, you're going to pay about £33,750 in tax, which is a lot of money. And this is where a lot of directors get caught out. They give themselves a dividend without being profitable. We strongly advise against that. If you're being profitable, yes, there are ways in which you can become tax efficient. Number one, you pay yourself a salary and a dividend each month to minimize the amount of tax you pay. Corporation tax starts at 20%, dividends are taxed at 8.75%. So you, of course, there's a scale, 8.75% up to a certain amount before it jumps. So of course, you can certainly pay yourself a dividend to extract funds out of the business, provided you're profitable. Now, how do you know you're profitable? You need a good accounting system. You need to be speaking to your accountant constantly to know how your business is performing. Because if you're